Hello, my name is Kelvin Davis, and I am the multifamily newbie. I want to welcome you to my channel. I want to welcome you on my journey as I strive to purchase my first multifamily property this year, 2025. My desire is to purchase a fourplex, quadruplex. I want to do a house hacking strategy where I'm basically living in one of the units and renting out the other three. And renting out the other three for enough money that I'm able to pay the mortgage and take care of any necessary expenses as well. Best case scenario, I'll have an extra $100 or two to put in my pocket once everything's said and done. What I wanted to talk about with you today is expenses. We talked about income, which is more than just rent. There are several different ways that you can have income coming in from the investment property. And the reason I like multifamily properties is because there are several different ways, several different streams of income that you can receive off of the multifamily. And even if one of the tenants should move out or stop paying rent, you have other tenants who are paying rent, so it's not like you're just having one source of income. Once it's gone, then you're in a bad situation, but you have the potential for other rents to still be coming in and not put you in as much a financial bind. Of course, you want your rent, but worst case scenario, to have two legs to stand on in opposition to four is better than no legs to stand on. So what we're going to talk about today are expenses. That's the other part of the equation. Income minus your expenses is going to tell you what your pure cash flow is. And your pure cash flow is that money that you actually have to put in your pocket to use towards purchasing another building at some point in time, or, like I say, living your life, doing what you do. So as far as expenses are concerned, expenses are more than just the mortgage payment. I've owned rental properties in the past, and I thought that income minus expenses equal money to put in my pocket just was the rental payment minus the mortgage payment equal what I could put in my pocket, but that's not the case at all. The expenses are more than just the mortgage. And we're going to talk about net operating income, how there are some expenses that are purely operating expenses, which basically excludes the mortgage. The mortgage is not an operating expense. And we're going to go over all of the expenses today, but we'll let you know the difference between net operating income, operating expenses versus, all expenses. We're going to talk about all expenses today. One expense that you'll probably see are utility expense. There's some multifamilies where there's just one meter and water meter. Now the electricity will usually be individually metered, but the water may only have one meter, and the landlord, the owner, will be responsible for making sure that that bill is paid. It may be individually metered as far as the water is concerned, but the sewer bill is separate. So you have to look at the expenses from utilities and make sure that you understand, are the tenants responsible for paying the utilities, or is the landlord, you, responsible for paying the utilities? And you want to make sure within your budget that you are conscious of and take note of all expenses. So you don't want to be caught at a disadvantage because you didn't set money aside or plan on a certain expense. Utilities are one. Another expense that you'll look at is landscaping. Who's keeping the yard up, who's cutting the grass, or if you're in a colder area, who's removing snow and making sure the common walkways aren't covered in ice, so people aren't slipping and breaking ankles and arms and things of that nature. You need to make sure that you have something within your budget for landscaping expenses. Even if you're going out and cutting the grass once a week or twice a month, you may want to make sure that you have $50 to $100 set to the side for gas expense, for maintaining your equipment, for having some kid in the neighborhood to do it. However you do it, you need to make sure that you have money set aside for landscaping expense, or like I say, if you're in a colder place, snow removal and landscaping. So another expense that you'll want to consider is property taxes. Property taxes are the taxes that your city, county, local government charges for the property to be within that area. Property taxes are always going to be. There are some exemptions that you may receive when you become 65 years old, if that's your personal residence. But since we're talking about investment property, then you're going to have to pay property taxes. And property taxes generally grow with the value of the property. So you need to make sure that you have a line in your budget for property taxes as an expense. And a property taxes basically, or they tell us, they cover the fire department, police department, the roads being maintained, schools and things of that nature. So property taxes is something that you definitely need to account for. Another thing is property insurance. You want to make sure that you have insurance on your property, because if it should burn down, some natural disaster, a tree should fall, whatever should occur, you want to have insurance in place so that there's money available to immediately take care of that situation. You're not having to, sell everything you own to take care of it. And most lenders, of course, are going to require property insurance, and will even require that you escrow property insurance as well as your property taxes in your mortgage payment. So usually that'll be covered in your mortgage payment, the property taxes and homeowners insurance. It's PITI, property insurance. No. It's principal, interest, taxes, and insurance. That's usually what your mortgage is made up. PITI, principal, interest. You're going to pay the principal back on your mortgage. You're going to pay interest on the money that you borrowed for your mortgage. You're going to pay your property taxes and your insurance. Usually that's the ball, that BALL, that is your mortgage payment. So also, as far as expenses are concerned, you need to make sure that you put money aside. And all of these are items that I'm saying you need to monthly put money aside to make sure that these things are covered. You're not having to pay these things every month, but at the end of the year, your property taxes are due. At the end of the year, your property insurance is due. Your landscaping bill may be a monthly bill. Your utilities may be a monthly bill. Yes, there'll be a monthly bill, but you want to make sure that whether it's monthly or yearly, that you're monthly putting something aside. Even if your property taxes say is $1,200, you want to put $100 at least aside, because you know that $1,200 bill is coming due in December. So every month you want to put $100 to the side, so in December when that $1,200 bill comes due, you have it to pay.